Hello and welcome to NIT70. We're here with another informative video, so make sure to like and subscribe. Today, we're going to talk about investing in SPACs, the hidden gem in investing, and what to expect as an investor. We'll cover most of the things you need to know about SPACs, so keep on watching. Before we get into the main topic of this video, I would like to explain a few things. For those who don't know about SPACs, the acronym stands for Special Purpose Acquisition Companies. They are publicly traded buyout companies that raise collective investment funds in the form of blind pool money through an initial public offering. The purpose of pooling the money is to acquire an existing private company, sometimes in a specified target industry sector, such as oil and gas, information technology, or hospitality, food, and beverages. The pooled funds are then put into a trust where they are held until the SPAC identifies a merger or acquisition opportunity to pursue and complete. If the SPAC can't find a suitable investment within 3 years, the trust fund money is returned to the investors, which is a great deal. Now, you must be asking, what is the advantage of investing at SPACs? Let me explain. The investor's entire lump sum is placed into escrow immediately and earns a small amount of interest while in anticipation of a merger. The downside risk is significantly eliminated. In a worst-case scenario, a deal never materializes and the investor fails to earn a positive return on investment. Still, for the upside possibility of when a good merger candidate does come along, the risk is well worth it, given the downside is fairly protected. Usually a little more than $10 per share will be returned if the SPAC cannot find a company to merge with. Investors can trade both the SPAC's stock and warrants during and after the interim stage while awaiting a good target company to merge with. The warrants are cheaper than the underlying stock and are used to raise more capital for the SPAC. There is, though, added risks when buying warrants because if a deal never goes through, the money invested can vanish. But if holding stocks, the money is returned to the investor. If a merger deal does go through, warrants can eventually be converted to actual shares. To exercise warrants, you must call your broker and they will do all the paperwork needed to submit to the company. Once done, the investor will have to pay roughly $11.50 to turn a warrant into a share. The actual price for converting warrants to shares can be found on the SEC website. Now, it isn't a requirement to turn warrants into shares, as you could just sell them like stocks. That said, more money is to be made when trading warrants, as you can acquire more warrants with the same amount of capital. As the underlying rises, the warrants will follow suit, giving you better percentage gains. When it comes to time constraints in SPAC scenarios, there is never an open-ended time allotment to devour a transaction. There is always a limit, forcing the SPAC team to find a target in a specified period of time, let's say 2 years. While there is lockup and illiquidity for a time until the merger occurs, it's still limited and means investors can be sure that if a deal is never agreed upon between management and investors, then the initial funds are returned. One of the most high-profile recent deals involving special purpose acquisition companies involved Richard Branson's Virgin Galactic, which became a public company in 2019. Another notable SPAC merger that was a huge success was DraftKings, the largest online sports betting website. So, wouldn't you agree that investing in an SPAC is a hidden gem? Also, some SPACs worth looking at right now are Forum Merger 2, or FMCI, which is intending to merge with a plant-based food company, and Collier Creek Holdings, or CCH, which is merging with Utz Quality Foods during the third quarter of 2020. If you're interested or eager to start investing, SPACs might become a friendly investment for you. Remember, be sure and be wise about your investments. What did you think of this video? Let us know in the comments section, and if you like this video, then don't forget to hit the thumbs up and subscribe to this channel for more investing content. Also, hit the bell icon to get notified first. Thanks for watching.